Good morning, everyone, and welcome to NYSE Live. I'm Kristen Scholler here in studio at the Stock Exchange. We do see equities fractionally lower this morning after technology shares pushed the major indices higher yesterday. Now, minutes from the Federal Reserve's January meeting showed officials cautious of lowering interest rates. President Donald Trump has spoken in favor of cutting borrowing costs. He nominated Kevin Warsh to succeed Jerome Powell as Fed chair this year. Well, stocks hovering near all-time highs, companies have proven successful in raising funds, and that's true for the unicorn Anthropic. A week ago, the artificial intelligence company scooped up $30 billion in fresh capital. Anthropic finished the Series G funding round with a $380 billion valuation. In its announcement, Anthropic said this money will go towards research, product development, and infrastructure expansion. Let's take a look at what's on tap this hour. Kevin O'Leary is going to join me to discuss his latest venture aimed to meet the rising demand of AI and hyperscale cloud infrastructure. He'll also deliver his take on cryptocurrency this year and what trends are prevailing across the VC space. Plus, NYSE listed Hagerty recently published its 2026 bull market list featuring collector vehicles most poised to increase in value in the year to come, and its CEO will share more. Then at 9:30 a.m. Eastern, we'll take you live to that opening bell podium, as we always do, as Centrus Energy is on hand to celebrate its uplisting to the NYSE. This firm supplies nuclear fuel and services for the nuclear power industry and says it's helping meet the need for clean, affordable, carbon-free energy. Let's start though with the markets, as we always do here on NYSE Live. Joining me now in studio with more is Kevin Mon, President and CIO at Hennian and Walsh. Kevin, it's great to see you this morning.
It's great to be back, Kristen.
All right, let's talk these markets. Fractionally lower today, but still hovering near record highs. What's your take?
Yes, we're seeing a lot of rotations developing in the markets thus far in 2026. Small caps outperforming large caps, value outperforming growth. International stocks continuing to outperform U.S. stocks, emerging markets over developed markets, and now technology has taken a backseat, and we've seen sectors such as energy, materials, industrials leading the way. That's very interesting to me as a portfolio manager, because I'm not necessarily abandoning some of the more thematic trades that actually provided all the growth in 2025 and 2026, but I do want to start diversifying my portfolio to take advantage of some of those rotations that have developed.
Okay, interesting. So certainly we've seen that in 2026. Do you anticipate that to be a theme throughout the year or a more near-term strategy?
I think that's a longer-term diversification strategy, but to me, this is going to be a year filled with much more short-term bouts of volatility, as we've already seen thus far this year. But if you're going to look for true growth opportunities, you need to follow the money. Follow the money in terms of where all the money is going to continue to be spent. I know you have Kevin O'Leary coming on shortly talking about AI infrastructure. That's one of the areas where money will continue to be spent, but it's also going to be spent in aerospace and defense, power solutions, nuclear power solutions, natural gas power solutions that are necessary for the AI revolution to continue, and then, of course, healthcare as it relates to the biotech trade.
Let's talk about earnings. We're toward the tail end of earnings season now. Some of these consumer retail stocks starting to report. Collectively, what is your takeaway from earnings season so far?
Another strong earnings season. 75% have beat earnings estimates, 65% have beaten revenue estimates. We're on track for about an 11.9% year-over-year earnings growth rate for the S&P 500. If that holds, Kristen, that would mark the 5th consecutive quarter of double-digit earnings growth for the S&P 500. Not too shabby. To me, that's a sign that this economy right now looks pretty strong. If you think unemployment fell to 4.3%, GDP growth looks like though it's going to be around 3.6% for the fourth quarter. Inflation is moderating, earnings is growing. Fed doesn't need to cut interest rates right now, that's for sure.
All right, so let's talk about that. Takeaways from these Fed minutes, because I think they did surprise some market watchers just in terms of how cautious the officials seem to be when it comes to lowering borrowing costs.
Correct. I think investors shouldn't be looking to the Fed for too many answers this year, because the Fed doesn't need to provide too many answers because of the Goldilocks economic conditions that exist right now. Not too hot, not too cold. Perhaps 2 rate cuts during the second half of this year. Certainly nothing during the first half of this year. And I think they're right to perhaps point out that if in fact inflation does get out of control, we may need to step in, raise interest rates, but that's obvious. They don't even need to say this. I think we're going to learn more on Friday about core PCE, which is their preferred inflation gauge. If that follows CPI, well, then that's a good sign for the economy.
Are you looking at economic projections for jobs and inflation for the year? Of course, the Fed's dual mandate.
I am. If I look at what the Fed is forecasting right now, they believe unemployment will be end of the year at 4.4%. We're about 4.3% right now, so stable. They're considering the economy is going to slow to 2.3%. We're about 3.637 right now. That would be slowing, but still growing. And then if I look at their forecast for inflation, core PCE 2.5 this year, 2.1 next year, it gets closer to their 2% target. I think that's a relatively stable outlook for the economy. That means the Fed doesn't need to do much, perhaps lower 2 times 25 basis points each, and the economy will continue to grow, but not at a gangbuster pace.
You mentioned bouts of volatility that we could see this year. It is a midterm election year, and we've been hearing right from market participants that that might come along with that based on history. Are those buying opportunities?
Potentially, it depends on what pulls back. So if I look at what's taken place in the AI trade over the course of the last 3 weeks, the current area that's under the microscope, software. Their amount of spending that's taking place right now, will it actually lead to any meaningful ROI? Is it going to improve their business practices? All those are valid questions. But I think investors need to be patient with respect to the AI spend right now because that ROI will not be achieved for years down the road. But if you follow where the money is being spent as opposed to who's spending it, that leads you to data center construction companies like EMCOR. That leads you to data center cooling companies like Comfort Systems or Modine Manufacturing. That leads you into the power solutions and utility companies. That's where I see the opportunities. So if those areas pull back, I think that's a very attractive entry point.
Are there specific stocks on your radar?
Other than the ones I just listed, I like a utility company called Duke Energy.
Yep.
Duke Energy actually owns and operates 6 different nuclear power plants in North Carolina and South Carolina. They got a dividend of 3.3, forward-looking PE of around 18. And they hold up well in the face of volatility. And guess what? Their stock's up 10% year to date. Not too bad.
They were here at the New York Stock Exchange this week.
Saw it.
Yes, indeed. You did, Kevin. So, okay, we talked about economic data. We talked about earnings. We talked about the sectors. I do want to talk more broadly about international stocks.
Yes.
You had mentioned, obviously, emerging markets and developed markets, I should say. But what are you seeing when it comes to developed international markets?
Yes, very, very interesting right now. Over the course of the past 1 year period, international stocks have significantly outperformed U.S. stocks. Emerging market stocks have outperformed developed markets. So developed markets over the last year up over 30%. So where do you find the opportunities there? Well, if you look into the indexes, it's really healthcare and financials that are the largest market cap weightings in those international developed market indexes. More of a value play, and value is leading growth this year, so that makes sense to me. But more than anything, this just serves as a reminder to all investors who are watching the show right now of the benefits to diversifying your portfolio globally. I think the U.S. will continue to lead the way, but that doesn't mean you don't add some allocations to international stocks as well.
Anything else our viewers should know?
I think what we really need to pay close attention to is what comes out in that core PCE reading. If we come in below 2.8%, that shows that inflation is moderating. If we get above 2.8%, then now all of a sudden the hawks are going to come back out and they're going to suggest that no rate cuts this year, and the market isn't expecting that.
Okay, we'll be following that closely. Kevin Mon, he's president and CIO at Hennian and Walsh. Kevin, thank you so much.
Thank you, Kristen.
Great to see you.
You too.
All right, from one Kevin to another. Coming up, everyone, Kevin O'Leary is going to join me to discuss his latest AI-driven venture, as well as what he's seen across the cryptocurrency landscape. Stay with us. We'll have more on the other side of this break.
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live. NYSE listed Hagerty recently dropped the 9th version of its bull market list, which shifts through the collector vehicles most poised to increase in value over these next few years. The company's CEO, Mikhail Hagerty, recently sat down with NYSE content creator Ashley Mastronardi to talk the list and his firm's evolution. Let's take a look.
It started as literally a retirement business for my parents who had been in the insurance business prior. And they knew that there were these little niches in the insurance world where there was a lot of passion. And wherever there's a lot of passion, that means there's better risk from an insurance standpoint. And it started off actually insuring a tiny little niche of wooden boats, classic wooden boats. Not a lot of people would even think about that as an insurance opportunity. And then it evolved mostly into what was used to be called the classic car space or the collector car space. And now we look at it as this bigger enthusiast vehicle category, which is cars that people want to own. They own because they love them, because they're drivers. They love that whole aspect of driving and owning cool cars and the community around it. So it's been an amazing few decades, and we've been 4 years here listed on the New York Stock Exchange, and I'm having a lot of fun playing with cars.
How large is the classic car market?
It's larger than people think. So when we look at the collector car market, just looking at the US, it's over 35 million vehicles in our kind of target category. And these are cars right now that are registered and that are extra cars in people's households. And they have some other characteristic that makes them interesting. Usually what that means is the values are going up over time rather than, you buy a new car and it kind of goes down in value. These kind of collectible cars, they're going up. And that's our world. And we surround them with insurance. We have our membership offering, which we call Hagerty Drivers Club. And now we have an auction company where we help people buy and sell these cars. So it's a whole ecosystem that kind of works together. And it's a bigger world than a lot of people think.
Is there a specific profile of a classic car collector?
Car collectors, they tend to be in the middle of their life where they have a little bit of discretionary income, and they tend to own their home. They tend to have regular daily driven cars that they drive on a daily basis for a transportation standpoint. And then, they're feeling good about things and they want to go buy that special car that they drive on a sunny Sunday afternoon or for some kind of pleasure purpose. And that's our world. And this pattern of people buying cars like this has been going on for decades. Actually, almost 100 years people have been collecting cars. So it's a long tradition. It's a bigger world than people think. And contrary to popular belief, the next generation is getting into collecting cars. And that's why we published this bull market list, which is to look at not just, okay, what are the cars on the rise, but what are the cars that the next generation is looking at and paying attention to.
That's right. You just launched the 2026 bull market list, essentially the cars to watch. What cars made the cut and why?
It's 11 cars on the list, and they're in different categories. So there's always some iconic, sort of higher valued cars on the list. And this year it's the Porsche Carrera GT, which was a car built in the early 2000s. Very high performance, kind of the last purely analog high performance car. And of course, Porsche is a brand that's been on the rise for the last 10 years. Then there's this whole list of kind of drivers cars underneath that. So a really affordable example, which they made over 1.2 million of, is the Mazda Miata. The second series of them is now really on the rise. That's a car that was $10,000 for a long time, and now it's sort of mid-teens, $16,000, $17,000 car. The most collectible car in the world, in the U.S., is the Corvette. And this year, the Corvette Z06, the C6 Z06, which is a really high performance variant, made the list. BMW M5, another, again, kind of driver, fun, performance car, kind of the high watermark of BMWs. But then there's another big trend underneath here that we've been watching for a few years, which is kind of trucks and SUVs. We know that, today, modern drivers are often buying trucks and SUVs as their daily use vehicle. And the vintage variants of those are really starting to show that collectability. So this year we have a really high performance Chevrolet pickup truck. There's a Dodge Ram Charger, which was kind of like the Dodge version of a Ford Bronco, and Broncos have been really popular lately. And then kind of finally rounding out the list, we always sort of look at earlier kind of vintage classic cars and say, okay, what are the cars that maybe are more like their parents' cars or their grandparents' cars? What are those that are starting to show interest for this next generation? And this year, the team picked the Continental Mark II, which is a really cool 50s stylish going out to dinner car.
What was the criteria for the list?
Well, it's driven by a couple of things. One, we have a world-class media team that is out there writing stories about what people like and what people are interested in. And so they help kind of pick the list. But most of it is data-driven. The beautiful thing about insurance as a core business is not just, well, it's a really good business, is that it's full of data. So we can see what are people buying, what are they selling, what values are going up, what are those trends? And then we can also see, what are the specific demographics and customer groups that are buying those. So this group was really emerged from our data over the last year, and we're going to be looking at pretty closely to see how they do.
And classic cars are one of the largest alternative asset classes in the US. How do you see that area evolving?
Biggest question that I get asked is, what does the next generation think about cars in general? And then if they are interested, what are they interested in? And we always try to tell people is this is a very durable asset class. When we go back, generations, literally my father's generation, my generation, and now down to the Gen Y and Gen Zers, is that the interest in cars does shift over time. And we're seeing this sort of rotation out of really, really vintage cars and much more towards sort of modern, high performance, even supercars. And that's a really fun thing to watch in the auction space. But it's durable because even in downturns, these cars tend to hold their value very well. In the last few years, there's been some, kind of cross currents in this space where some cars are really rising, and the ones that may not be at the top of the list are still holding their values really well. And we saw this tracking all the way back to the Great Financial Crisis, further back than that in our company history, the kind of dot-com challenges in the early 2000s. Many of those cars really held their own as an asset class. And the best thing about it is they're also fun. And so, yes, you can put some money in it. You're probably going to keep that money, but you're going to be able to drive that car during its lifetime with you and have a great time along the way.
If people want to get involved in classic cars, what's a good entry point?
Well, a great entry point is to just start doing a lot of reading and research. Of course, most of those resources are now online. I strongly recommend that people read our stuff that we provide online, the Hagerty valuation tools. Start watching some of our YouTube channel. We have 3.6 million subscribers on our YouTube channel. And this is not about insurance. This is just about the fun and love of driving, the community around collecting cars and what's hot, what's not, what are the interesting cars. And get to feel what you like first, and then start learning a little bit about the values. And then if you want, you can come take a little bit of a shopping break on our Hagerty Marketplace and take a look at what is actually for sale today.
All right, thanks again to McKeel Hagerty and Ashley Mastronardi for that interview. Well, up next, Kevin O'Leary's firm just announced its latest venture, and he's going to share more details with me, I should say, on the other side of the short break. We're excited to see Kevin. Stay with us.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by Direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Welcome back to NYSE Live. Earlier this week, O'Leary Digital, which boasts Shark Tank star and venture capitalist Kevin O'Leary as its chairman, announced a pair of projects it says will meet the accelerating demand for artificial intelligence and hyperscale cloud infrastructure. Kevin O'Leary joins me now with more. Kevin, great to see you this morning, joining us down in Miami. How's it going?
Great, thank you very much.
Yes, thanks so much for joining us. Now, your firm announced the formation of a joint venture with WestGenco to advance development of Wonder Valley, Utah. What is this going to involve?
The challenge we have today, regardless of what digital ecosphere you deal with, whether it's crypto or AI or cloud compute, is we have no power anymore on the grid. We are tapped out. The demand right now, just in U.S. domestic, is for another 93 gigawatts. We haven't added anything in the last 18 months. The Chinese have added 511 gigawatts, the majority of that going to AI compute. We don't have any. So most of these projects, including the one I announced along with the team in Utah, is around building power first. 1.4 gigs to start, and that'll provide 1 gig of compute power in terms of a facility. But the way we build these is we build them in stages. So we're looking for large tracts of lands that we can permit that have the water, have the fiber, have everything we need. And you have to find the right leadership in a state to do that. So in this case, 3 different senators and Governor Cox were all working together to make this happen. It's complex, but this facility staged at the beginning about 7.5 gigawatts compute, could go as high as 13. And so it's a multi-year, multi-billion-dollar investment. And Utah was not until this considered an opportunistic site, but they have what's most important, low-cost gas. And now we have the land, and I think we're going to do something very special in Utah.
You also announced that permitting is underway for Wonder Valley, Alberta. What is your goal with these 2 projects?
Same situation. What we do at O'Leary Digital is search in North America and internationally. We have, I'm an investor in facilities in Norway and Greenland. It's all about the cost of power. If we can get power at less than 6 cents a kilowatt hour, that's very attractive to most digital economies. And so where are you going to find the cheapest power? Well, we found it in Alberta. They have 6 trillion cubes of stranded natural gas. That's huge. And we have a great gas source in Utah and a pipeline there. So really, you've got to start with the power first. If you think about the way this develops is if you have no power, you have nothing. And so I'm going to predict and tell you something. Over the last, 3 years, so many data center sites have been announced, but less than half of them will ever be built because the contemplation at the time was they would attach to the power grid, the existing grid. There's no power left on the grid. And if you do attach to it, you cause the rates to go up in the local community up to 30%, the hospital, the library, the residents. The chance of that happening now, as you've seen the political kickback, the blowback's been brutal. The chance of you attaching to the grid for a significant data center is 0. So you better come with your own power, as we did in Utah, as we're doing in Alberta, same thing. And we will develop other sites the same way. It's a whole new mindset. But it's really about what the state can bring to the table. I mean, we can obviously tap the financial markets, but it's a competition. So Utah, the ball is in their court, and I think the senators and governors know that. We need as many incentives as we can get to drive this process through.
Kevin, you recently spoke at the World Liberty Forum I'm guessing that's why you're down there in Florida this morning. What were your biggest takeaways from this event, especially as it relates to digital assets here in the new year?
Well, there were the two main topics of that gathering, which was quite impressive. I mean, pretty well every banker and every leader of the crypto universe, they were all together in one place. And so think about two stacks that they were concerned about. Number one, and we talked about already, power. Can't do any of this without power. So we talked a lot about power, where it's going to come from next. But the other issue, which hopefully may be moving in the next 48 hours in a positive direction, is that of the Stability or Clarity Act that finally solves forever, the issue around, is Bitcoin a commodity or security, or can you do interest on stable coins? So I understand, through my contacts in Washington, there's a meeting going to happen at the White House to try and move this Clarity Act onwards. We really need that. And that's one of the reasons you've seen the price of Bitcoin suffer so badly, is this ambiguity about when the rest of this law is going to be passed. Remember, we had a big success in last year, in 2025, when we got the Genius Act passed. So that made stablecoins legal tender, but it doesn't solve the whole problem. We need the Clarity Act now.
Kevin, our viewers certainly know you from O'Leary Ventures. They know you as a shark on Shark Tank. And now they know you, too, as an actor. You had your recent debut in film in Marty Supreme. That movie, of course, nominated for awards. What was it like to play that character?
Yeah, we're nominated for 9 Academy Awards, but who's counting? We'll all be there. I'm very excited about going to the Academy Awards. I'm hoping the movie wins at least 3, but we'll see. I'd never tried it before, and I think what's really important, and I tell all my CEOs and my students this, it's very important to step out of your comfort zone once in a while. That exercise is the most important muscle in your body, the brain. I'd never done this before. I'd never, memorized a script, and of course, I was very fortunate. I'm working across an A-lister, Timothée Chalamet, Gwyneth Paltrow, Academy-nominated director John Safdie, great writer Ronnie Bronstein. So it wasn't like I was starting at the low end of the totem pole with movie makers. So I was very fortunate. I had a great time. I've got the bug, and I'm telling you right now, I will play the bad guy in Bond. I'm starting my campaign now. I want that role. We need someone real evil, and I'm the guy.
That's a deep tease, Kevin. I hope you'll join us. Again, we got to hear more about that. We so appreciate you taking the time this morning to join us on NYSE Live. Kevin O'Leary, chairman of O'Leary Ventures.
Thank you very much.
It's great to see Kevin. All right, everyone, we're just about 20 seconds away from the opening bell here on 11 Wall Street. NYSE-listed Centrus Energy is doing the honors this morning, celebrating its recent uplisting from NYSE American. There is a live look at the podium as Centrus, ticker symbol LEU, is set to open equity markets. It's a Maryland-based firm, a supplier of nuclear fuel and services. Let's take a listen.
16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit. never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream, and that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. We are off to the races here. Stocks open for trade. We did see stocks fractionally lower pre-market. I do want to bring in our market expert now, Jonathan Corpina. He's a senior managing partner at Meridian Equity Partners, joining us from the trading floor. Jonathan, great to see you this morning. What's on your radar as the stock market opens?
Hey, good morning, Kristen. Thanks for having me on. Yeah, a lot of exciting things going on here as you guys just witnessed the opening bell. But when we take a look at what's going on with the markets, clearly still have a lot of volatility here, day in and day out, mostly headline driven at this point. Yes, we are looking at the economic data that we get out on a regular basis. We're almost through earnings season, and we've seen the implications of that. But right now, as I said before, it's headlines that are moving this market. It's giving pause to investors as we've traded near the all-time highs within the last 4 or 5 weeks here. And that gives them a reason to take some short-term or long-term profits off the table. A lot of uncertainty in front of us, right? We're going to continue to look at our economic data. We're going to continue to talk about the Fed and what the Fed is going to do. And we've got our geopolitical risks that are out there that'll continue to add volatility to our markets. I'd like to see the VIX get down sub 20. It's going to take a little while and a little bit of help to get there. But as of now, I think we're going to continue to see this volatility.
Let's talk some of the economic data that you referenced there. Tomorrow will be a big day, Jonathan. We're going to get fourth quarter GDP figures. We're also going to get the Fed's preferred inflation measure. What is the market anticipating, and what kind of response could we see in extended trading before markets open on Friday?
Yeah, I'll kind of work backwards on that one. Anticipation, the reaction of it. I don't think we're going to see a large reaction to it. Again, I think what we're looking at is we get all this economic data, right? Where the Fed processes it, and then their output is what they're going to do with interest rates. So I think we're going to obviously intake this information here. We've seen over time our economy has gotten better, our job numbers have gotten better. All this coupled together is going to give a lot of information for the Fed to make a decision. All indications now is that yes, we are going to get rate cuts, but we're not going to see them until at least the second half of the year. So I think the step measures that we will see from this economic data is, again, that our economy is getting better. Inflation is coming down. I think investors, Main Street and Wall Street, are feeling a little bit more comfortable in the economic environment that we're in. We need to see that stability for our markets to then reflect that stability.
Yeah. I do want to ask you about what we can anticipate a week from tomorrow, because that is a large MSCI rebalance. You've been here on the floor for decades. What does that do to markets?
You're aging me. Yes, that's a quarterly event that we get. Where we see a large rebalance in some of these indices that are there. The Morgan Stanley International Indice is going to do a large rebalance. That gives portfolio managers an opportunity to buy and sell larger portions of their portfolio, kind of true them up, get them back into line as to their parameters in which they are allocated to their individual holdings. And when you see these large imbalances, these large volumes, it gives, again, portfolio managers this opportunity, but the impact on the stock prices isn't as much as it would be on a normal day, because there's a lot more volume, a lot more depth to the markets for them to get in and out. So I would look at some of those larger names that are out there. You're going to see a significant spike in volume. And again, that gives investors, even small investors, an opportunity to move in and out of stocks where the volatility wouldn't be as much as it would be on a normal day.
How would you categorize trading that we've seen in 2026 so far from your perspective down there on the floor?
Kind of interesting, right? Coming into this year, clearly talking about interest rates and what the Fed is going to do. We've seen the economic data and some of our geopolitical risks that are out there that have caused the Fed to pause. So I think that trading, those aspects have caused a little bit of a pause to our trading, right? I think some of these key factors that we were looking forward to haven't occurred just yet as far as interest rates are concerned. I also think as far as geopolitical risks that are out there, there's clearly some things in our forefront that can really change the trajectory of our markets and of our economy. So I think so far early in this year, we are still waiting and anticipating what the outcome is going to be. Looking forward and down the road, as I said before, second half of the year, I think we're going to start to see the Fed get back into their schedule of lowering interest rates. And I think also exciting to watch the IPO market. We've talked about some pretty exciting large IPOs that'll hopefully be coming to the New York Stock Exchange here to spark our economy. I think that market, that syndicate, that IPO market has been on the shelf for a while, and we're slowly starting to see that come back here.
It's a hot space, if you will. That
is.
might be a deep tease. Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners, joining us right from Neera's booth on the trading floor. Jonathan, thank you.
Kristen, thank you. Have a great day.
You too. All right, well, in some other news this week on the Inside the Ice House podcast, I sat down with Michael Blaugrund, VP of Strategic Initiatives for the NYSE's parent company, Intercontinental Exchange, and John Herrick, Chief Product Officer for the NYSE. We dove into the NYSE's 24/7 digital trading platform, and as the conversation got underway, Blaugrund detailed the opportunities that this will unlock for investors and its differentiator. Let's take a look.
We're responding to retail investors, many of whom sort of came of age during crypto's kind of, early years. And they've come to expect an always on, always available kind of notional base, so like dollar denominated trading experience versus the more traditional equities environment that trades during fixed market hours in terms of share quantity, settles over multiple days. Today's retail investor has a much more sort of fluid, kind of flexible expectation. And so we're really excited to introduce our new trading venue that's going to allow for tokenized equities to trade instantly, 24/7 against stable coins. That's really going to unlock the same type of user experience that they may have come of age experiencing with crypto and other digital assets.
Herrick then spoke to why now was the right time for the NYSE to develop this and how it helps firms meet the demands of their clients. Let's take a look.
When you wrap something in a smart contract, you're able, you improve the fidelity with which you're able to track it, fractionalize it, and you can do so much more with it. And so for us, it's really looking at the broader span of market participants. And I think I view this as a starting point. This is a foundation for broker-dealers that serve retail investors to begin to build digitally native product in a way that preserves all the things that are important about 100 plus years of markets that have evolved and the regulation that guides them. So this is really a starting point, and we're putting this in place to help those firms meet the demands of their clients.
Later in the conversation, Blaugrund looked ahead at what the next steps of this platform will look like and what people can anticipate. Check it out.
Digital markets are the sort of next evolutionary step that NYSE and Intercontinental Exchange are facilitating. This building has seen a lot of technology innovation, since its inception in 1903 and the prior buildings, back from 1792, whether it was crowd trading, whether it was the development of continuous trading around the time of the Civil War, whether it was the telegraph, whether it was the ticker tape, whether it was
wireless
broadcast
technology,
TV, like all these things have led us to broader participation, more efficient markets, better outcomes for investors, more efficient capital raising for companies. So change is hard. It's always hard. It's always a little scary. But I think for those of us who are like privileged enough to kind of work on these challenging problems, there's a lot of satisfaction in seeing that like we're part of a continuing mission to serve investors and issuers. And I think the future is very, very bright.
Thanks again to Michael Blaugrund, VP of Strategic Initiatives for ICE, and John Herrick, Chief Product Officer for the NYSE. Reminder to viewers, tune in each week for new episodes of the Inside the ICE House podcast. You can watch and listen wherever you get your podcasts and access our content by scanning that QR code that you see on your screen. All right, well, still to come, the Association of African American Financial Advisors, better known as Quad A, aims to address the needs and the concerns of African American financial professionals. Its CEO will tell us more about its latest initiatives. Plus, NYSE-listed Janus Henderson announced its latest ETF offering this morning, and I'll be joined by one of the firm's executives talking to why this product is coming out now for clients. Stay with us.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the Architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. The Association of African American Financial Advisors is working to address the needs and the concerns of African American financial professionals. This year, the organization is celebrating its 25th anniversary with some new initiatives. For more on this, I want to send things down to NYSE content creator Ashley Masternardi, who's standing by on the trading floor with more. Ashley, good morning.
That's right, Kristen. The organization, also known as Quad A, has some exciting events coming up with NYSE-listed JP Morgan Wealth Management and Wells Fargo. Joining me now to share more is Sheena Gray. She's the CEO of the Association of African American Financial Advisors. Sheena, welcome.
Thank you so much for having me.
So tell us, what is the mission of Quad A and what does it mean to be celebrating 25 years?
Sure. So Quad A is the Association of African American Financial Advisors, and we exist to advocate and support for Black financial advisors. So what's so important about the 25th year is legacy. I think about our founder, Mr. LeCount Davis. He founded this organization as the first Black CFP. So we're honored to be here at the New York Stock Exchange honoring his legacy.
And what type of services does Quad A provide for its members?
Sure. So our main focus is to ensure that there's representation in this industry. And we also want to make sure that the next generation is equipped to be able to handle the next generation of wealth.
All right, and February is Black History Month. Does it feel especially timely for you to be sharing this message on the floor of the New York Stock Exchange?
Absolutely. I think it's more fitting for us to be back here because just last year we sat right up there at the New York Stock Exchange and rang the bell, and it was probably the most incredible experience that I've ever had, and for our members. We were able to bring 45 Black leaders and advisors to the New York Stock Exchange, and we made history. So it's very fitting for us to be back in the same place.
What is Quad A doing to ensure that the wealth gap is narrowing?
So I think what I'm most excited about is that we are thinking about the next generation. So we're working across the board with HBCUs nationally, and we're making sure that we're equipping financial advisors very early on in their careers. So right now we have about 4 cohorts where we're preparing advisors with SIE prep, and we're helping them become the next top talent for our partner firms.
And what is the importance of having a financial advisor?
It's so important. I mean, I wish I can just shout that to the rooftops because proper planning will definitely help any family meet their financial goals.
And you have 3,100 members, 8,000 in your network. What is the feedback that you're getting from your membership?
Our members are so excited right now of where we are and where we're going. Again, 25 years is just the beginning for Quad A. We are movers and shakers in this industry. Our members are advisors at our top financial firms, and they are committed to helping us make the impact to continue to increase representation in this industry.
And I understand you have some exciting events coming up with NYSE listed Wells Fargo, JP Morgan Wealth Management. Can you share the details?
Absolutely. Think cocktails, conversations, Black advisors, and Black excellence, right? So we'll be doing a co-branded event with JP Morgan Wealth Management in Dallas in a few weeks. And those events are tailored toward our members and our non-members, right? So students who want to go into the wealth management industry and advisors who want to learn more about our partner firms. And then we're not going to just stop there. We probably host about 30 a year. And then we'll be in LA with our partners at Wells Fargo in early March. So I hope to see you there.
So what is next for Quad A?
So bigger and better, right? So right now we're at 3,000 members. I would love to double that by next year, right? So we would love to continue to make impact on Capitol Hill and with our partner firms by increasing representation.
And do members ever reflect back to the significance of being part of an organization like this? And what are some of the stories you've heard?
So one story in particular is when we were here at the New York Stock Exchange, I had an advisor say, Sheena, I've been an advisor 30 plus years. I have dreamed of being on the New York Stock Exchange. Your organization allowed me to have that access and that opportunity. I mean, literally, he was in tears. He was just so grateful for the experience. And I can't say enough how many advisors say that to me after coming to our sold out events. They didn't even know that we had this many Black advisors who were doing the work and making impact for their clients.
And what does it mean for you to be the chief executive officer of an organization like this? Like, what personally, what does that mean?
It's inspiring. It's inspiring for my daughters to see this. It's inspiring for my colleagues, my friends. I mean, I feel like I made it, if you will, right? I mean, to be at a time like this, leading an organization that is just making so much impactful change on Capitol Hill, and with some of the major partner firms, it doesn't even seem real at times.
All right, Sheena Gray, CEO of Quad A, thank you so much for joining us at the New York Stock Exchange.
Thank you for having me.
Kristen, I'm going to send things back to you in the studio.
Ashley, thank you so much. And viewers, stay with us. We're going to have more NYSE Live on the other side, including NYSE-listed global asset manager Janice Henderson after it unveiled its latest offering. She's going to join me in studio. This next guest on the other side.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. And we've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. NYSE-listed asset manager Janus Henderson boasts nearly $500 billion in assets under management, and it's generating new buzz this morning. That's because the firm has launched the Janus Henderson CLO ETF, adding to the company's lineup of active fixed income funds. And joining me now in studio with more is John Kirshner. He's Global Head of Securitized Products and Portfolio Manager at Janus Henderson. John, welcome and congratulations on this launch.
Yeah, thank you. It's a pleasure to be here.
What more can you share about this fund?
Well, we have a AAA CLO ETF, JAAA, that was launched back in 2020, and then we launched a BBB CLO ETF back in 2022, and this kind of fills out our spectrum of CLO ETFs. We now have three. This one's going to focus on the AA and single A part of the capital stack, so in between JAAA and JBBB.
Okay, so for viewers watching and they're not familiar with the CLO ETF, what is it?
Well, CLOs are floating rate instruments. They can be very high credit quality. They're made out of bank loans, which are floating rate. So it's a way to get high quality, high yielding, floating rate fixed income exposure at a very low fee. So for a lot of investors that think about fixed income as a fixed income payment, this is different because it floats with interest rates, which can be, very helpful to portfolios, particularly when interest rates are going up.
Okay, so what is in this particular ETF that just launched?
Yeah, so again, AA and single A CLOs.
Yep.
So again, floating rate, but still very high credit quality. The difference between a JAAA, which is now 27 billion plus, is that you get about 50 to 60 basis points more yield, which I think is very important as the Fed may be cutting interest rates later on this year.
What clientele or buyer is this fund catered to?
Well, both institutional and individual investors. It's interesting because about 2/3 of our investors now are currently institutional, and a lot of insurance companies are in our top 10 holders. But every day we hear from individual investors that use this to diversify their portfolio.
Interesting. So what's next for the fund?
Well, we just launched today. We have our partners at Guardian Life putting in seed capital, so it's launching at $100 million, which is very high for an initial launch. JAAA, like I said, is 27 billion. JBBB is over $1 billion. So we're going to work very hard to grow this fund into, the next $1 billion CLO ETF.
Why is now the right time for this?
Well, it's a good question because a lot of people say, well, if the Fed is cutting rates, why do you want floating rate? But there is still $8 trillion in money market funds out there, and T-bill funds and ETFs are tens, if not hundreds of billions of dollars as well. This is a way to get very safe exposure, but with enhanced yield. So all those people that are in money market funds or T-bill funds, they should check out JAAA or this fund, JA, to get more yield, but still a lot of safety.
What's the ticker, to be clear?
JA.
JA
Yes.
on this particular fund.
Correct.
So people will see it trading today.
Correct.
Okay, and when we look at big picture 2026, right, we're still in the early innings here. What are your goals for this year?
Well, it's been a very busy year. We have other products we're going to launch, and we now have JAAA, JBBB, JA. We have an MBS ETF, JMBS, an ABS ETF, JABS, and a securitized income, JSI. We have two ETFs over in Europe, so we're just looking to grow all those ETFs and expand our our reach in the space.
What does it mean to be here at the NYSE talking about this launch and, of course, part of the NYSE community with these ETFs?
Well, I mean, it's great. I remember coming down here when I was very new to the industry. You always get that special feeling when you come down to the New York Stock Exchange, you know, the heart of capitalism.
Yeah.
So it's always a pleasure to come down here and see what's going on.
All right, John Kirshner, he's Global Head of Securitized Products and Portfolio Manager at Janus Henderson. John, thanks again. Congrats.
Yeah, thanks, Kristen. Appreciate it.
Great to have you. All right, again, viewers, you can follow that at the ticker symbol JA, as our guest John just shared there. And before we have to let you go, let's take another look at markets. We heard from Jonathan Corpina, a longtime market expert down here on the trading floor today at his particular post. A very cool scene for viewers tuning in. We did see fractional losses at the open, but still the major indices are hovering near record highs. Technology names led the way yesterday, but we have seen a broadening out of the gains in 2026 to include some of these economically sensitive sectors. And we'll hear more about that, of course, tomorrow when we get the fourth quarter GDP report, as well as the Fed's preferred inflation measure. That's the PCE, or Personal Consumption Expenditures Index. The Fed has a dual mandate: maximum employment, stable inflation. Of course, this is going to basically decide its path forward on interest rates. There's a live look. We haven't seen markets do a lot this morning. The Dow down just 0.2%, a consolidation, if you will, as Jonathan told us from the trading floor earlier. The S&P down about 0.3%. Take a look on your screen. Reminder to our viewers, you can catch us on all the streaming services that you see right there. We are live weekday mornings from 9 to 10 a.m. Eastern, covering all of the action happening here on a regular basis at the NYSE, including the opening bell at 9:30 a.m. Eastern. Thank you for watching as always, and we'll see you back here tomorrow morning.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?